thanks for joining me on my market report. My name is Mike, and my market report is on mortgage rates. We talk on a daily basis about what's driving mortgage rates on it and what's impacting them. Sometimes it could come from an economic calendar or a combination of that with headline news or geopolitical. But also, sometimes the market sentiment changes, so that even makes things more confusing, where now good news is now bad news and vice versa. So we're here to try to give those explanations as to what's going on with the markets. Today we'll just start off with the economic calendar. A little bit about myself is I am a loan officer. I do work with a national lender. I do we do loans in all 50 states. So if you got anything refinance or purchase, we'd love to be able to talk to you. But more than that, we do like to be a resource. So if you got questions, please reach out anytime. We're here to assist you guys. But without further ado, we'll jump with the economic calendar for our report today. Uh, this Today we just got the NAHB housing index, or home builders. Actually, this NAHB home builders index for the month of April. So here, our previous one back in March was 79. Forecast come for 77. It dropped 2 points down to 77. So this is the lowest we've seen it since last September. This is a confidence level, measures confidence level for home builders, and what it does. Uh, and the number one, of course, complaint now is mortgage rates. The big spike we've seen over the past, I guess 4 months now with mortgage rates. That's when it started ticking off in January, so this year with mortgage rates. Uh, labor and materials are still an issue. However, of course, mortgage rates kind of taken over. The rise in mortgage rates kind of taken that over, and of course now we're seeing a decline in that as affordability starts shrinking. This week we'll get mostly a week ahead. If you look ahead, it will be mostly housing data. We will get a few other items here, like the Philly Fed. I think maybe retail sales as well. Um, we'll take a look here. Let's glance here. So yeah, we got housing starts and building permits on Tuesday. We got existing home sales for the month for Wednesday, and then Thursday we got the Philly Fed. And of course, we always get the initial jobless claims. And then Friday, no retail, pardon me on that one. In the market, we got the manufacturing PMI and services PMI for markets. So that's what we'll have coming up ahead here. So we got some important data. It could be some potential market movers, but right now investors are kind of focused more on inflation data as we received last week. Last week they were kind of pleased in the sense that the core in some cases came in a little bit lower. Uh, but now we had the 3.5 day weekend for investors to rethink things. Now they're kind of getting kind of iffy about where things are at. Stocks are in negative territory today. We do got more corporate earnings reports continuing on. So right now we've been seeing kind of a mixed result of that for the most part. So and then to look at here, mortgage-backed securities. We had a pretty bad day on Thursday as it basically dropped 66 points, which translated to worse pricing from Wednesdays after we had a couple of days. So we've been, like I said, we've been getting a lot of these head fakes. So that's why I caution, even though we were getting these, we'll have like a day or two here where we'll get some looks like some nice improvement. Maybe we got a little change of circumstances, and then we'll have a day like Thursday where we just drop. So that's why I try to be cautious with where things are because we haven't yet found a bottom yet, and we're not really sure where that could be. Today we're down 2 basis points. We did start in the morning lower. We're up a little higher with that wick and have subsided a little bit. However, we're in the range where it's not going to affect pricing as of yet. So pricing from where we left off on Thursday is unchanged. Currently, we're up 2 basis points. Here's how you can see. We see how we're way down here. We did spike upwards, even spiked a little bit, but since then we've kind of subsided a little bit subsided a little bit. So now we're about 2 basis points higher than where we left off on Friday, or on Thursday rather. But again, it's not enough to make any dents in our pricing for mortgage rates. So mortgage rates remain unchanged. Treasuries are spiking again. We're going to new highs here, as you can see here. We were about the 2.85 range when we left on Thursday afternoon. Actually closed at 2.83, and right now we're up to 2.86. So we're seeing a rise there. This is concerning stocks on the growth stocks, especially Nasdaq type ones. This is making a factor because it does cut into their profit taking on those growth stocks. Now, last but not least, we'll touch on what's the average rate for conforming loan limits. The 30-year fix is now at approximately 5.15, and then the 15-year is at 4.45%. Now, these do have uh, points built into them, so take these with a grain of salt, but these just kind of give you like a measuring stick as to what to expect, what's out there. Again, there's too many variables to go into pricing a loan, so a rate, so these aren't the end all of what's out there, but these, if you guys would like the rate quote, please reach out. We are here to help you guys out. We'll be more than happy to give you a rate quote, what we would offer free folks. In the meantime, if you guys got any questions, please ask. We're here to help you guys out. But if you guys like these videos, please help us out and smash that like button and subscribe and share us. We greatly appreciate any further exposure. You guys have a great rest of your day. Thanks so much for watching. I look forward to see you guys in tomorrow's video. Have a great day. Bye-bye.